Afternoon, everyone. House Taxation Committee will come to order. First item of business is bill introductions. Do we have any requests for bill introductions? Seeing none in the room or online, we will move on to our first item of business for the day, hearing on House Bill 2197. And I would turn to the revisor's office for an overview on 2197.
Thank you, Mr. Chairman. House Bill 2197 would expand the eligibility for property tax abatements to allow for buildings and improvements to also qualify if such buildings or improvements were destroyed or substantially destroyed by natural disaster. This would be in addition to what's currently provided for homesteads. Under the law, the Board of County Commissioners, after making findings, determine whether to allow the abatements or credits against tax requests. Accordingly, this bill would apply for tax years 2016 and thereafter, so it goes back a few years in its application. And with that, I'd be happy to stand for any questions.
Thank you, Mr. Sievers. Committee questions? If not, I have a couple. First of all, I'm assuming the 2016 timeframe, and maybe this will be addressed by the proponents, is that to capture former disasters, or what's the reason for the 2016?
To be honest with you, that may be a question for the proponents. Last year, I'm not sure. I honestly don't know.
Okay. I will address them, and I'm trying to read through here. I remember when I was reading the bill earlier, there was something about a 3-year, I believe it's on page 2, line 16 and 17, where it talks about the next succeeding 3 taxable years. I just had a question on that. If the appraisal value would come in, those are redone every year, what would be the reason for extending out the 3-year period?
Mr. Chairman, that would be the case if the property taxes have been paid. And so if they've been paid, it would get a credit against, their taxes, assuming that, if the value would drop, I'm guessing that then they could apply towards the next 3 taxable years.
Okay, and again, that might be a question that our proponents can answer. So any further questions for the revisor? Representative Blex.
Thank you, Mr. Chair. If I understand it correctly, normally the buildings that's in place on January the 1st year are considered there for entire tax year. Is that date in that bill? And I admit I haven't read it fully to where, what's on the property January 1, and say you had a disaster in April, you still wouldn't be eligible for that under this bill, correct?
Representative, I may need you to restate the question. I made a little bit of a hard time understanding. You're correct that property is valued as of January 1, and assuming that the disaster does not occur January 1, anytime later than that, the bill itself would allow for the abatement of taxes after that date until the next succeeding January 1 when it would be reappraised. I don't know if that answers the question. If it doesn't, I'd be happy to try again.
Oh, thank you. That does. Thank you. Thank you, Mr. Chair.
Further questions, committee? Seeing none, thank you, Adam, for the overview. Committee, I'll turn your attention to the fiscal note. Is there anyone from Department of Revenue that wishes to address the fiscal note? If not, we will continue on to our proponent section of testimony, and I would like to welcome first to committee Representative Tim Johnson, 38th District, Kansas House of Representatives. Welcome to committee. I don't think your microphone's on. If you want to hit the button.
Thank you so much, Chairman Smith. It is a pleasure to be in this room and speaking to the Taxation Committee. I come as a second-year proponent along with Representative Neely. We were not in this House last year when this first came up and came through this committee and was passed out, but I clearly was in the path of the tornado that precipitated this particular bill. House Bill number 2197 concerns property taxation relating to buildings and improvements destroyed or substantially destroyed by natural disaster. And the bill deals with all kinds of those. We're in a natural disaster at this time, according to our governor, with these storms. The problem that occurred in our region, for Mr. Representative Neely and myself, it was a 31-mile tornado through Douglas County, south of Clinton Lake, proceeding northeasterly all the way up to 15958 151st Street, where the tornado finally lifted. That's my house. What we saw was that in the taxation of outbuildings and structures in our communities, they were still paying for items that weren't going to be covered by insurance because of the nature, and many times there were workshops in our communities out there, buildings, farm types of buildings. And so our county commissioners, one of whose letters appears as a proponent, immediately stepped in and said, we need to adjust this for our citizens. And so they presented this and it came through. And again, like with many bills, COVID. Just want to, you've heard what the bill does. For me, it was on May 28th. It was a nice day. The next day, my son was scheduled to deploy for a year to the Middle East. We were having a nice evening when we heard there was a tornado coming from Lawrence. Things kept going, and eventually we saw the storm. It was huge. I've done a lot of public safety work. I had not seen a storm or a cell quite like this. I'm not frightened of these storms, but when it got close and when I went into the basement with my two grandkids who lived with us at that time, 2 and 4, all I could remember saying is, dear God, please don't hurt these kids. We were spared. That's wonderful. But we go out and we saw what happened. I do remember the 2-year-old, and you have a little picture in here, and I did put the picture of the child in there, my 2-year-old, just because he's like my namesake. But you can see from those pictures the type of storm, the damage. And as we traveled around our community, in fact, I know our governor was there, we realized we needed to do something. And so, when we came into office, both Mr. Neely, Representative Neely, and myself reintroduced this with the urging of our House leadership to bring it back through the House so that we could prepare it and send it through. Financial figures I do not have in front of me on the numbers of impact from just this storm, but it is a disaster bill. I think of it as a tornado bill because I was there, but it's for the other disasters. I remember going to Coffeyville a few years ago after the flooding. Could be along the Missouri River in the future. I think this is a way that we can equalize losses for those that have an inability to recover from their losses. And the final statement I would make is, we never got our house completely fixed because it wasn't covered completely. Then in 2020, I received my real estate tax statement showing that my tornado damaged house had gone up $26,000 in value by appraisal. I found that interesting. So this is an issue that we as a committee can deal with in our House. And with that, I would stand for questions.
Thank you, committee. We only have a few verbal test conferees today, so I will go ahead and accept questions at this time for Representative Johnson. Representative Highland.
Thank you, Mr. Chairman. Did you go ask the appraiser why you went up $26,000?
I discussed that with Mike Steben, my county commissioner.
And?
Based on the house sales in the area around me that were not impacted by the tornado, they assessed my house based on the improvements. But that's how that structure works.
Thank you.
Representative Sanders?
Representative, thank you, Mr. Chairman. Representative, how extensive was the damage to your property?
I think at this point, with the check I got yesterday, we're right around $150,000.
Thank you.
Representative Turner?
Thank you, Mr. Chairman. I just wondered to, where I live, I get notice of the revised assessment that might say something like what you've described, but there's an appeals process where do you have an appeals process where you could go back and show them pictures and say, look, here's the house?
Yes, but I did not do that. We were making repairs, and when I said a loss of 150, that's the total of that. Now, I have been covered by a large portion of that for insurance. My share is somewhere around $35,000. It wasn't covered for different water losses because of flood damage. I didn't have a rider, and because of a couple of the outbuildings. No, I did not.
Representative Day, did you have a question? It was answered. Representative, I was curious if you had an answer to the questions that I had for the revisor's office on going back to the 2016 in the bill and the 3 years of succeeding taxable years. Is that to recover from these prior storms?
Sir, I honestly do not know that answer. Could I allow Representative Neely?
Certainly, yeah, that's fine. Just introduce yourself.
My name's Representative Neely. I'm from the 42nd District. And the answer is yes. There were multiple businesses and farms that were completely destroyed during this incident, tornado. And the way we feel about this bill is that what we did was kick people when they were down. There was a, what was it? I'm trying to think of what it was. It was a place where they grew different things, and they had, they had all kinds of stuff for sale, and it totally wiped out their business. And yet they were taxed for that building and that structure. And that structure was several $100,000s that they were taxed on. So not only did they lose their business, lose part of their home, all that stuff, then they were taxed on top of it. And when he was talking about why it went up, we've had multiple businesses across our county or out of our county that have raised the taxes in our area. What he was discussing and everything, my taxes or my evaluation on my house went up $28,000 last year. And my driveway's sinking into the ground. There's nothing new to my property whatsoever. There are large places, and I won't mention those names of those businesses, but they are bringing in high-tech jobs that are creating a housing market where there's no haggling. They come in, if you have a house for $230,000, they say, we'll take it for $230,000. There's absolutely no haggling going on whatsoever. So, but that's getting off the topic. I'll let him get back and everything. But it was and everything. Was there another question you had as to that, Mr. Speaker?
Yeah, it was just regarding the dates, not time frame.
And that was the dates so that it would cover the incidents that occurred during that time period and the people that were affected by that incident.
Committee, any further questions? I just have one final question. I think you would probably be the appropriate one to answer this, but how do you foresee this appeal process going through, or the request for the abatement? Is this something where they would come in and request a full abatement? Is it trying to be proportionate to the amount of property lost or devalued? How will the county commissioners ultimately create a quantitative decision rather than an emotional, a qualitative decision based on each taxpayer that might come in and present an abatement. Is there a process so we maintain some consistency if this bill becomes law and these county commissioners deal with these decisions?
Yes, it was my understanding, and I'm Mike Steben, one of the commissioners, and Doug Smith, both of those that served the Southern District of Leavenworth County, in coming in, that it would be the value that was actually lost by their committee, and that it would have to come before them, and the values would have to be established. That's what my understanding was.
Representative Kelly.
Thank you, Mr. Chair. Last year, and I was a little late getting in when Scott was doing, but last year I think we had an amendment to this bill that kind of didn't, on the refunds or the abatement, that each of the districts that were involved that had tax levied had some say in this and not just the county commissioners, and wondered if this is still the same this year.
I cannot answer that question because I wasn't part of this last year. I don't know if the revisor's office would know. I do not have information on that amendment.
Mr. Sievers, do you know if the bill that we have before us, is that the bill as it last was in the legislature last year, or is this before that amendment?
Yeah, that amendment is not included in this bill. I believe the House Tax Committee had that last year. I think I recall what Representative Kelly was talking about. Essentially, it allowed the other taxing subdivisions, off the top of my head, to either kind of exempt themselves out so they would receive their tax, or also allow the abatement. But that provision is not included in this bill.
Committee, any further questions? Representative Sanders.
Thank you, Mr. Chairman. Representative Johnson, would it be your intent to have the county cut you a refund check, or would it be that you would have a discount on your property taxes going forward?
I would prefer that if this was acceptable, I would take a discount off of oncoming.
Thank you.
Any further questions? Seeing none, thank you for your testimony, Representative.
Thank you so much, Mr. Chairman.
Our second proponent is Brian Habgen, citizen of Linwood, Kansas. Brian, are you with us?
Sir, he contacted me, and he will not be able to be here, and just submitted that as a written document. He had another meeting at his bank.
Okay, thank you, Representative. Is there anyone else wishing to appear on behalf of House Bill 2197 as a proponent? If not, committee, I will address your attention to written-only testimony from Dave Trobert, Kansas Policy Institute, Dean Klar, Kansas Livestock Association, Randy Stuckey, representing the Kansas Grain and Feed Association, the KCC, Renew Kansas Biofuels Association, and Mike Steben, Leavenworth County Commissioner. Is there anyone wishing to appear as an opponent on House Bill 2197? Seeing none, we have one neutral testimony. We have it as WebEx, but he graced us with our presence, so I would like to welcome to the microphone Trey Cocking with the League of Kansas Municipalities. Welcome to committee. I don't think your mic's on.
Thank you, Mr. Chairman. I was not home with kids today, so I was able to be here. The bill in front of you right now is the Senate version of the bill from last year. So last year when this bill was in the House and the House Committee amended the bill to allow cities to opt out their portion of the property tax if this happened. Our concern is the geographic nature of cities. They're much more dense. So when the Greensburg tornado happened in 2007, 95% of that city was damaged in that tornado. Versus a county or a school district, you're going to have less of the overall county damaged, so the property tax weight from the other part of the county can carry it. However, when a city is damaged, there may not be weight to carry the city. So after a disaster happens, city still has to provide police, fire, public works. FEMA funds will cover extraordinary cost, but they do not cover ordinary cost. So this creates a huge hole in our budget, and we have no way to operate. Kansas law says we can only have 5% reserves. We have no sales tax, no franchise fees because no utilities are working in a Greensburg-style disaster, and now any property tax that we would have had is rebated. So at this point, at $0, there's no way to operate a city, there's no way to rebuild a city, so we are simply asking for a carve-out if more than 25% of a city is damaged, that we can retain our portion. So if somebody, if they're a disaster, they're going to get a good portion of their property tax bill back. It's just that city portion that city would retain because of the geographic nature of cities. I'll stand for any question. And my amendment is, I wrote my amendment, our proposed amendment, or the amendment that was added last year. That is in my testimony. Stand for any questions.
Representative Baker.
Thank you, Mr. Chairman. Thank you for coming, Trey. So what's different between you and the counties? Why wouldn't the county want to get some kind of a clawback also?
Our concern is we don't think there's a way for, if 25% of the county is damaged, that's going to be a spectacular event. But, it happens all the time with natural disasters, whether it's flood or tornadoes, that you have a significant portion of a city that is damaged just because cities are compact in nature. Now, the way this bill is set up, a county can always refuse the application. So if the county had significant countywide damage, they could always refuse the application.
Thank you.
Representative Blex.
Thank you, Mr. Chair. Yet, in response to that, does not generally the city and or county get most of the FEMA money as opposed to individuals?
So a city will get FEMA money for extraordinary expense. So for overtime, you will get FEMA money. For removing debris and rubble, you'll get FEMA money. But it does not pay for the ordinary expense. So, and you're also on the hook for 10% of that extraordinary expense. So typically FEMA pays 75%, the state pays 15%, and then the city is on the hook for 10% of that extraordinary percent. So you still have anything that is normal operations, you still have to pay for like you always would, and then you have 10% of the cost of the extraordinary cost.
Representative Gartner.
Thank you, Mr. Chairman. Hi, Trey. I'm going back to last year a little bit when we heard this bill, the House version. And you said this was the Senate version, I believe.
Correct.
There were a couple things. Number one, I think I'm like the chairman. I have no idea why this goes back to 2016.
I'm unfamiliar with what disaster it would cover,
Maybe the flooding, I don't know, but, the folks that brought the bill last year, it was, the 2019 tornado in Douglas County and then went up north. But does this create also problems when you have a disaster and then after January 1st, doesn't it create some problems with appraisal, the whole process flowing through, going to the county or the city, the county, and possibly some folks might not have to pay property tax for a year, year and a half, 2 years?
The problem with this
on the timing.
the problem with this bill is the way Kansas law treats real estate. Your property is only worth something on January 1. So January 1, you have property, it burns down the next day. It's rebuilt by January 1, you're going to pay that whole bill. Now, conversely, you have ground on January 1st, you do the extreme makeover and the house pops up on January 2nd. Basically, you're going to go till almost 2 years without paying any property tax on that building. That's how Kansas law is. Now, for the Senate, I was researching this. This is done as a tax credit in Oklahoma. So it is the entire state bearing the cost of these refunds instead of just the county that has already had a disaster. I'm not proposing that, but my light kind of went off. Oh, that's the way to do it. It's just a tax credit on their income tax. And then that doesn't mess with any of the local stuff. But that's how they handle it in Oklahoma. I will say Missouri, what they do is they will take it off the property tax, but it goes right back on the property tax when the new structure is completed. So versus Kansas, if it's complete, if it's not completed, then it's not taxed for another year.
Right. Did the Oklahoma bill include commercial property?
As far as I could tell, it did. And that's really what, last year when this bill came in, initially it was just for ag structures.
Right.
We didn't testify on that bill because it was just for ag, but then the committee amended it to be basically all property, and that's at that point when we said, all right, we have a concern with this bill because it definitely impacts cities.
Thanks, Terry.
Great, I just have one question, and perhaps this might be better addressed by the proponents, but we need to be careful when we make decisions as a legislature, because we heard reference that this is kind of a tornado bill, but as we're currently under very concerning pandemic, we have emergency management plans in place that were not created for a pandemic. So are there things in this bill, as a neutral opponent, I'm going to say that you're neither opposed nor supporting the idea as a neutral proponent or a neutral conferee. Look into your crystal ball. Is there anything in this bill that we could do to improve, to cover, things other than the floods or the fires or the tornadoes, the things that might be a little bit more isolated, trying to look into the future, creating legislation that will already be a good overall policy rather than just targeted?
I mean, at the end of the day, if you were to change it to a tax credit, so that puts all 3 million Kansans on the hook for whatever happens, because we all pay taxes, that's how that works. If you looked at some sort of general loss of use of the building, that's going to cover a lot of things. But, do we want to have that as our policy in the state of Kansas? And how does that work with insurance and all those things? But, as big a boat as we can get to handle these disasters, it's like insurance risk pool. The bigger you have that risk pool, the better off you are. And are we willing to take part of that risk as society to help out the individual?
And that's kind of where I go with looking at this bill. If you adopt a policy like that, who ultimately makes that decision? The bill as it sits is the county commission. Do we have other entities, if it's an amendment, allowing other taxing subdivisions to voice their opinion and quote unquote opt out? Each individual tax district has an opinion. Ultimately, even if it's a tax credit, who ultimately makes that decision to put that dollar amount or put the state on the hook for that specific tax amount? Is that a county appraiser that actually gives a certified value that is, as I said earlier, a quantitative value, rather than going around to each 105 counties and perhaps getting a different opinion from each set of county commissioners?
I mean, there's 7 different ways to look at it. I mean, that's the thing about disasters. We don't know what the next disaster is going to be. I have been amazed at the current disaster that we're in, not the pandemic, but the extreme cold. We're going to have long-term ramifications from the extreme cold. It's not just going to last 2 weeks. We're going to see impacts for the next year, I think, because of the last 10 days. So all I'm saying is I don't know what that next disaster is going to be. But, I think the big question for you guys is how do we bear that cost as a society when it happens?
I've heard locusts might be coming next, but
I mean, at this point, I feel like we keep on leveling up and find out what the next level is bringing us, and it gets more difficult.
Committee, any further questions? Representative Sanders.
Mr. Chairman, I think this is more of a question for you than for the conferee, but we still haven't gotten an answer to the 2016 question. I mean, before I would feel comfortable on voting one way or another on this bill, I'd like to know why 2016 was the date that was chosen. Are we going to be able to find that out at some point in the future?
Yes, if we intend to work this bill, we'll make sure and get a clear answer on that for the committee.
Thank you, Mr. Chairman.
Any further questions? Seeing none, thank you for your testimony, Trey. Is there anyone else wishing to appear as a neutral testimony on House Bill 2197? Seeing none, we will close the hearing on 2197 and move on to our next item of business, House Bill 2239, and I would turn to the revisor's office for an overview.
Thank you, Mr. Chairman. House Bill 2239 will extend the corporate net operating loss carry forward from losses that occurred in tax year 2018 and thereafter. Pursuant to the bill, the current 10-year carry forward would essentially be extended to 20 years. And with that, I'd be happy to stand for any questions.
Committee, any questions for the revisor? Seeing none, thank you, Adam, and we will move along to the fiscal note. Does anyone from Department of Revenue wish to comment on the fiscal note?
Mr. Chairman and members of the committee, this is Kathleen Smith with the Kansas Department of Revenue. Our fiscal note for House Bill 2239 provides that extending the carry forward period from 10 to 20 years would have no immediate fiscal impact, but would begin to reduce state general fund revenues by $1.86 million in tax year 2029 or fiscal year 2030. With that, I would stand for questions.
Thank you, Kathleen. Committee, any questions? Representative Sanders.
Thank you, Mr. Chairman. Well, like the previous bill, again, why is the date 2018?
Mr. Chairman, this is Kathleen Smith with the Kansas Department of Revenue. I'm not sure, maybe some of the conferees could speak to that, but I would assume that it's because of the Tax Cut and Jobs Act that came through. But I would let the conferees speak to that.
Thank you.
I would make a comment that this fiscal note with the extension from 10 to 20 years would require quite the crystal ball to have a very accurate fiscal note. So I appreciate the efforts to put this together for us. Is there any further questions on the fiscal note? Seeing none, thank you, Kathleen, and we will move on to proponent testimony. I'd like to welcome to committee first Larry Wiens. I apologize if I didn't say that right, with the Vice President of Tax for T-Mobile. Larry, are you with us?
I am. I'm with you on WebEx. So thank you, Mr. Chairman. I hope everybody can hear me okay.
Yes, you're coming in loud and clear.
Great. So thanks again for inviting me to provide testimony today. My name is Larry Wiens. As was said, I am a Vice President of Tax for T-Mobile. As I'm sure most of you know, T-Mobile is a wireless communications company providing services across the United States. T-Mobile and Sprint, a relatively local company in the Kansas City area, merged a little less than a year ago. And we are now, as a combined company, in the process of building out a 5G network across the United States. And I'll explain in a few minutes why that's relevant to this testimony. So 2239, as was stated by the revisor, is intended to extend the carry forward period for NOLs from 10 years to 20 years. And before we jump into all the details, let me just level set and make sure we all understand what we're talking about when we're talking about net operating losses or NOLs. So in any given year, a company can operate at a loss just obviously by having more expenses than they do income coming in. And so the difference between those expenses and that income creates what we call a net operating loss or an NOL. The tax law allows companies to carry forward those NOLs for a period of time. There's nothing controversial about that. It's really just an acknowledgement and a recognition that business cycles don't always coincide with a neat 12-month period that companies file their tax returns for. So the whole point of an NOL and NOL carry forward period is to allow businesses to sort of smooth out their income over a period of time to match, a business cycle or an economic cycle. So Kansas currently stands at 10 years for the carry forward period, and that is relatively short when you compare it to what is allowed at the federal level and what is allowed at other states. So first, the federal level. At the federal level, prior to tax reform, which occurred in 2017, the carry forward period allowed at the federal level was 20 years, and it had been that way for a number of years. So even prior to tax reform, the federal carry forward period was basically twice the Kansas carry forward period. In tax reform, the federal carry forward period was extended from 20 years to indefinite. So the NOLs at the federal level now do not expire at any point in time. Kansas, again, is at 10 years. When you compare things at the state level, there are 45 states, including the District of Columbia, that have an income tax. 38 of those states have an NOL carry forward period that is longer than 10 years. 16 of the states are at an indefinite carry forward period, basically matching the federal carry forward period. Another 16 are at a 20-year carry forward period. So again, Kansas is at 10, very much in the minority relative to these other states. If you focus on our surrounding states, Colorado, Nebraska, Missouri, they're all at 20 years. Oklahoma is indefinite. So why does this matter? The best way for me to describe why this matters is to explain in the context of my own company. So as I mentioned, we're building out a 5G network across the United States, which is very expensive. We're spending upwards of $10 billion a year to do that. And it's not a one-year thing. We will be spending that kind of money for a number of years in a row. And during that period of time when we're making that investment, we are operating at a tax loss. We're incurring tax losses and creating these NOLs. Our hope is that when our investment period ends, we will have positive taxable income in those outer years. Then we can use those NOL carry forward periods to offset that taxable income. There's nothing controversial about that. There's no loophole. It's just, again, a recognition that the business cycle and the investment cycle or economic cycle the company has may not always be, coincide with a 12-month period. So for us, a longer carry forward period allows certainty that we will eventually realize the tax benefits associated with our investment. If you have a short carry forward period for these NOLs, there's a risk that they could expire unused and we would never get the tax benefits associated with them. Another example I can provide to you is a startup company. So I don't think it's any surprise that most states would welcome startup enterprises into their state, hoping to generate entrepreneurial activity. Also, no surprise that a lot of times those startup companies operate at a loss for a long period of time before they really turn profitable. Again, a short carry forward period creates risk that those companies will never realize tax benefits associated with that investment in those earlier loss years. The longer carry forward period creates more certainty regarding that. All of this is made all the more acute right now, given the pandemic and the situation we're in. Just sort of illustrates the unpredictability of the business cycle. Right now could be a period where I'm hoping to use NOLs and all of a sudden a pandemic comes along and I'm once again operating at a loss and I can't use my NOLs and so they expire unused on me. Again, there's no good policy reason for that. So it argues for a longer carry forward period. To address the question that was asked by one of the gentlemen about why this is tied to 2018 and the suspicion that was offered by the Department of Revenue person is exactly right. So in 2018, the tax reform that was enacted in 2017 and really took hold in 2018 is what is creating the reason for this to be essentially retroactive 2018. There were a number of changes in tax reform that caused companies to potentially have a greater likelihood to have a tax loss, namely things like bonus depreciation rules. And so that is why this Kansas bill is attached to essentially when the start of the tax reform was in 2018. This bill was, this is actually the third time either myself or someone from my company has presented before this committee. Last year, the committee approved this very same language, and then the bill went to the House and was passed on a vote of 118 to 2. We just unfortunately, because of the pandemic, never made it to the Senate floor. So I would very strongly encourage you all to support this bill again. Happy to answer any questions that anybody might have.
Thank you. Committee, any questions? If not, I have just a few, and maybe I'll lump them together and you can kind of combining your answer that way too. I don't mean to get into the weeds too far, but could you explain briefly how you track your NOL? Is it year by year so you know which credits or which ones are expiring? And also, as kind of a second question to that, but maybe you can incorporate that into your first answer, how does depreciation factor into this, where you have perhaps an asset or an investment that you have put into place? Maybe it has a depreciation of 7 to 10 years, but yet you're carrying that NOL out to now 20 years, or in some states even farther than that.
Yeah, certainly. So the way we track it is just we refer to the year that an NOL gets created as its vintage. So like if I have a tax loss in 2020, I'll have a 2020 NOL, and I can carry that forward in Kansas now for the next 10 years. And so we just maintain schedules that basically track those tax losses by year, and then we monitor where they're at relative to expiration, and if they expire, they basically just disappear and go away. On your second question about depreciation, so depreciation, as you mentioned, the typical way depreciation works is a piece of property is put into service, and then it creates tax deductions for that year and some following years. And so those deductions that occur in that year and each following year just become an expense essentially, which then factor into your overall NOL for that year. So this year I might have depreciation deductions that are, adding to my NOL this year. Next year, there's another, depreciation deduction associated with the property that I placed in service this year that adds to the NOL next year. And so it just becomes a component of the NOL for that year to the extent there is depreciation in a given period. The one thing I would note is, and again, sort of back to tax reform and why this bill is tied to tax reform, one of the big changes in tax reform was something called bonus depreciation or immediate expensing, which basically allowed companies to write off 100% of their investment in depreciable property in the year that they place it in service. And so because of that, it is much more likely for companies to operate at a tax loss when they are in a capital intensive environment, much like I mentioned my company is. So if I spend $10 billion on CapEx this year, a large piece of that 10 billion I can just write off immediately. And that becomes a part of my NOL for this year, and then I can carry that forward to subsequent years. So hopefully that answers your question.
Yes, you did a good job. I appreciate that. Committee, any further questions? Seeing none in the room and none online, thank you for your testimony. I appreciate it. Next conferee, I'd like to welcome Kent Eccles with the Kansas Chamber.
Live? We're good? There we go. Good afternoon, Mr. Chair, members of the committee. Kent Eccles with the Kansas Chamber of Commerce. Thanks for letting us appear as a proponent in favor of this bill. I'm going to try not to repeat what you just heard, so I've crossed out a bunch of my notes, and I'm just going to try to hit a few things that weren't brought up. So just as background, before the 2017 Federal Tax Cuts and Jobs Act were passed, the federal government allowed a 20-year carry forward. Kansas only allowed 10, and we still only allow 10. And we've been before this committee, going back years, touting how the Tax Foundation, the trade group out of DC, has cited that as a reason why Kansas is not competitive with our surrounding states. So there was that 10-year discrepancy with the federal tax code. So that was one thing that we've been in this committee before on. So post the 2017 Tax Cuts and Jobs Act, the feds started allowing an indefinite carry forward. So they changed it from 20 years to indefinitely. But they only do that at an 80% taxable income, at 80% of your taxable income, I should say. Whereas Kansas is still at the 10-year carry forward. So this bill, basically what it does, it just mirrors the federal tax treatment of the 80% carry forward, but it still limits it to 20 years, this bill does, whereas the feds are indefinite. So the Tax Foundation recommends that you, as a body, pass this bill as is, or you could alter the bill. Instead of moving it from 10 to 20 years, you could make it indefinite to completely match the feds. So whatever the will of the body is on that one. So I'll stop there so I'm not repetitive and take any questions.
Thank you, Mr. Eccles. Committee, any questions? I just have one. Do you have any idea on how many companies would need to use this, the new 20-year method? I mean, obviously, we've heard from T-Mobile, they're, we heard testimony, capital intensive.
Yeah, I was going to say, any industries that have capital intensive investments, whether it's 5G network or building a major refinery or manufacturing plant, something like that. I don't have a number for you. The Department of Revenue may, I mean, based on how they figured their that's a tricky fiscal note to your point, but how they calculated that, they might have a better idea.
Representative Baker.
Thank you, Mr. Chairman. Thanks, Kent. So the federal government doesn't look like they're doing real well in their finances either. So I just wonder how many of those tax cuts made in 2017 are going to survive in the years to come, and I wonder if this is one of them that'll be chopped up and put back in.
That's a good question.
Because they own a printing press and we don't.
Yeah, I mean, the new administration's talking about rolling some of those back, but I don't have the crystal ball to ascertain how that's going to go.
Thank you.
Any further questions? Oh, Representative Helgerson. Yes.
This may not be for you, but
Okay.
you might be able to answer it. Why are we coupled with the feds in most instances, but not in this?
Maybe T-Mobile's better suited to answer that one on this particular issue. It's a good question.
I don't know that we have an answer for that, but that is a good question. We can take a look at that.
I think we should be coupled with the feds or mirrored on it. It would be to Kansas companies' benefit competitively with our surrounding states if we were.
Committee, any further questions? Seeing none, thank you for your testimony. Is there anyone else wishing to appear as a verbal proponent? Yes, Jason Watkins. Committee, you should see written testimony. I apologize, I missed you as a verbal proponent.
We might have turned it into you wrong, possibly. So that's what you say anytime the chairman apologizes to you. Jason Watkins on behalf of the Wichita Regional Chamber of Commerce. Mr. Eccles crossed out most of his notes in order not to repeat what was already said. I just left my notes back here because basically everything's been covered. Do want to just quickly, though, share from the perspective of the Wichita Chamber of Commerce, and I've shared this with this committee and many others before, that South Central Kansas economy, it's a manufacturing, advanced manufacturing cluster, if you will. And so a lot of our large employers and a lot of the folks that we're trying to encourage to either expand in our region or relocate to our region are exactly the types of firms and industries that are very capital intensive in terms of that investment. And so we do see this as a competitiveness issue, Mr. Chairman, with other states. So with that, happy to stand for questions at the appropriate time.
We've heard some reference to our neighboring states. What do our direct neighbors do? Oklahoma, Missouri, Nebraska, Colorado, where do they sit?
You know, I was sitting back there listening to the testimony of others and said to myself, you really should have figured that out before you get up to testify. So I can't answer that for you.
I can answer that question if it's okay. Am I okay to answer that question?
Yes, Mr. Weems, go ahead.
Yeah, so Colorado and Nebraska and Missouri are all at 20 years, and Oklahoma is indefinite.
Thank you. And I do remember you speaking of Oklahoma. I did not know where Colorado and Missouri and Nebraska were at. So, thank you. Committee, is there any further questions? Yes, Representative Gardner.
Just one quick one, Kent. Since you're representing the chamber, why wouldn't this have been part of Senate Bill 22?
There we go. I don't know.
Okay. It just seems to fit that mold.
It could become part of Senate Bill 22.
Right.
Sure.
You're exactly right.
I wasn't part of that discussion, so above my pay grade, I guess.
Okay, thank you.
Committee, is there any further questions? If not, I would draw your attention to written only proponent testimony from Randy Stuckey, Dan Murray. Is there any others wishing to appear as a proponent on House Bill 2239? If not, we will open it up to any neutral or opposing testimony. I show none that was turned in as neutral or opponent testimony. Seeing none, we will close the hearing on House Bill 2239. Committee, it was my intention to work House Bill 2143. We have a few minutes here if we want to go ahead and proceed with that, if there is no objection. If not, I will give you just a moment to pull up that information. While I am doing that, Mr. Siebers, would you be willing to give the committee a brief refresher on House Bill 2143?
Sure, Mr. Chairman. House Bill 2143, if you may recall, would remove the sunset from the sales tax exemption which exists, that's slated to expire on July 1, 2021 for sales tax on the rebates of new motor vehicle manufacturer rebates. So essentially what the bill does, it removes the expiration and then the exemption would remain in effect in perpetuity. It wouldn't be sunset like it currently is. And with that, I'd be happy to stand for any questions.
Thank you, Mr. Siebers. Committee, any questions for the reviser? Seeing none, committee, what would be your wishes for House Bill 2143? Recognize Representative Mason.
Thank you, Mr. Chairman. I move that the committee recommend House Bill 2143 favorable for passage.
Thank you. We have a second from Representative Helgerson. Discussion. Seeing none, Representative, you may close.
Thank you, Mr. Chairman. That was easy. I renew my motion.
Committee, you've heard the motion by Representative Mason. All in favor, please signify by saying aye.
Aye.
Aye. Any opposed? Motion carries. Thank you. Committee, that concludes our business for the day. I will conclude our meeting today with a good old-fashioned go Cat.